All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. I hope you guys are well. Happy, what day is it? Happy Tuesday, everybody. Today is April 29th, 2025. And the top story this morning, it was kind of hard to find a top story this morning, not because of a lack of news, but because of a deluge of news. There is so much happening in the world today. So let's start with a big one. UPS has announced 20,000 layoffs. They're also closing several facilities. So what's going on here? It's basically the breakup with Amazon. This is something that's been underway for a couple of years now. Amazon has been doing a lot of its logistics in-house, something that they've been expanding, relying less and less on UPS. So this has shown up in their earnings for a couple of quarters in a row. But we don't know here how big of an impact is the tariffs or the trade war having on this decision to cut 20,000 bodies. Either way, this is going to drive unemployment higher. This is going to add to the problems in the economy, the weakness in the labor market, something we've seen on this channel for a long time, even though the Federal Reserve has insisted that the labor market remains resilient and strong and all that other stuff. Jerome Powell likes to, all that smoke, he likes to blow up our you-know-whats every time they get together. That being said, UPS is doing what a lot of companies are doing here. They're not changing their outlook on guidance. They're not withdrawing their guidance. They're just saying, we're going to update our guidance later. So they're pulling their guidance without actually pulling their guidance. So UPS stocks actually up a little bit this morning. The market likes layoffs. They like cost cuts. So that's a big one here. Now, the other thing going on this morning, also kind of related to the logistics world, is the trade deficit. Wow. $161 billion, or should I say negative $161 billion. That was the net flow of goods due to trade, or of dollars due to trade in the United States. We bought 161 billion more than we sold to the rest of the world. Look, that's up from 148 billion in February, which is almost an all-time high. The all-time high was actually in January. We've got a lot of companies are front-running tariffs. We saw this in March. They're trying to buy in. They knew prices were going to go up. I think a lot of them underestimated just how much. I think the whole world was pretty surprised on Liberation Day at how big those numbers were. But they're front-running the tariffs, buying the inventory to try to stock up on the stuff before the price goes up. You can see it in those import numbers blowing out. Now, this is going to produce a big hit to GDP. The trade balance is a factor in that GDP math. And since our trade balance is so deeply negative, it detracts from GDP. This is going to push us into those negative GDP numbers, and it's going to bring back that recession talk. And let's be honest, guys, we've been in a recession for what, 4 years now? 3 at least. You could argue the recession started in the first quarter of 2022. Remember back when we changed the definition of a recession and tried to just define our way out of it? Well, as far as the average person in Main Street goes, that never changed. I don't care what AI stocks did or how many cockamamie funds and new acronyms they came up to hide the losses in commercial real estate and private equity. Main Street has been in a recession for years. It's going to get worse because of the tariffs. And now that big scramble to bring stuff into the U.S. ahead of the tariffs, that is going to make it even worse. Now let's talk about the European grid. The biggest blackout, to my knowledge, in European history, certainly since World War II, hit yesterday. It took out all of Portugal, most of Spain, and even certain sections in France here. So look, we still don't know what the cause was. They're saying it was an atmospheric event, some kind of a transient. We still don't know. Portugal has ruled out a cyber attack. Spain appointed a judge to explore whether it was a cyber attack. Look, here's the story. Here's what I think. I think there was some relatively minor transient on the grid. It happens all the time. It happens in America. The grid typically can absorb these minor transients. But we have been making our power grids, we, the West, have been making our power grids less and less reliable. A big giant generator like you have at a hydroelectric dam or at a nuclear plant, a coal plant, or a natural gas turbine, these big giant spinning turbines, they're basically like 100-ton flywheels. These things generate a lot of momentum, and they can actually serve mechanically and electrically to stabilize the grid, because when you get swings in voltage, whether up or down, These big turbines don't change their speeds. They have so much momentum. So the electric fields that are created in the generators can actually expand and contract. It's kind of like downshifting your engine when you're going down a hill. You're slowing down even though you're not hitting your brakes. The engine is kind of absorbing that extra kinetic energy. Well, big giant turbines act the same way. The problem is Europe has been getting rid of their big giant turbines, and they've been replacing them with small little intermittent power sources, solar panels, and windmills. Now, they don't have giant synchronous generators that operate on the grid. They use power inverters. And power inverters don't serve that load balancing function, or not load balancing. They don't serve that voltage stabilizing function. There are no volt amp reactives from power inverters. And so the grid becomes unstable. Is this enough electrical voodoo for you guys? Or are we getting a little out of my wheelhouse here? Anyways, the net result is you have a power grid that cannot absorb these routine transients. And you can see in this sequence of events that the Spanish grid operator released, this is something that the grid should have been able to take. Whether it was a minor hiccup here or a tree branch hit a power line here or atmospheric incident, whatever they're saying it was, some kind of atmospheric oscillation, they should have been able to handle it. Europe is suffering the consequences of years of, let's face it, they put a 16-year-old girl in charge of the whole continent's energy policy. What did you think was going to happen? Did you really think this was going to go well? How dare you? Remember that? Back on your sailboat, Greta. The lights got to stay on. Meanwhile, BP earnings cut in half, more than cut in half. Their debt went up $4 billion. Why? Well, maybe it's got something to do with the fact that they just fired their green energy architect. See also that whole rant I just went on about the European power grid. Also going on this morning, Coca-Cola earnings beat. Coca-Cola actually being rewarded here. They have kept their full year outlook. They've kept their guidance, and they're saying minimal impact on tariffs. Coca-Cola probably going to feel a little bit of a pinch from the aluminum tariffs that go into canning and bottling. But look, they make most of their stuff here. All that high fructose corn syrup, it's grown here, it's manufactured here. Coke not being too much affected. We'll see if any retaliation from overseas or any pushback on American products might eventually result in a decline in Coke sales. But for now, they're holding steady. GM, meanwhile, they posted earnings beat, and they're doing the same thing UPS is doing. They will reassess the tariff impact when they have more clarity, which means they're pulling their guidance without actually pulling their guidance. We got earnings from Spotify. Spotify stock is down sharply this morning on an earnings miss, even though they tripled their operating profit. So Spotify had a great year. The problem is expectations were too lofty. And look, that stock was up more than 100% year over year. So Spotify was due for a reality check anyway. But fear not, Spotify, because Nobody Special Finance is now available on Spotify. So we will surely turn that ship right around, onward and upward to higher things. Don't forget to check out the show on Spotify. Meanwhile, India, possibility of a trade deal becoming increasingly likely with India. There's a rumor this morning that they will offer most favored nation status to the United States. And look, guys, between that and the story about the Boeing airliners that China rejected, India said, we'll take those. The story last week about rumored to be talking about buying agricultural products, rare earths, selling to the United States. On top of that, Tesla just announced they're moving some of they're exploring more production in India. Actually, they didn't announce it. They hinted at it by offering refunds for some pre-booking fees. Look, the signs are all there. There's a deal coming with India. Is it going to be a good deal? Is it going to be an okay deal? We don't know, but it's pretty obvious that that's going to be the first one. And by the way, both Secretary Lutnick over at Commerce and Secretary Besson at Treasury are expected to make speeches today. It's looking like we could see a deal with India as soon as today. Now, will the market rally on this, or will it sell the news? We've seen a lot of optimism on the backtracking of tariffs here, so maybe this turns into a sell the news event. We'll just have to wait and see. And last but not least, we got to talk about what happened with the Navy yesterday in the Red Sea. The story went around late yesterday that an F-18 was lost at sea. It fell overboard on the aircraft carrier. Now, a lot of people are making jokes like, what happened? How does a plane fall off a boat? What's not being talked about nearly enough is the reason why that F-18 went overboard. It was actually being towed, and it was supposedly on the elevator that brings it from the hangar deck up to the flight deck. And it went overboard because the carrier was making evasive maneuvers. these carriers, which are bigger than freaking skyscrapers, they weigh, 120,000 tons of displacement, but they can do like ridiculous speeds and they're incredibly maneuverable. They were making an evasive maneuver when this plane went overboard. That's why it fell over, because the ship was listing because they were turning so hard. Something the Houthis did made the USS Harry Truman take evasive maneuvers. That is significant. Our Navy's defenses have been perfect in the Red Sea. The Houthis have thrown everything at us, and they have not scored a single hit against a U.S. Navy ship. The Aegis defense system in the U.S. Navy is incredible. It is awesome. It is not perfect. And yesterday, something got close enough that it spooked the Truman to make evasive maneuvers. Sooner or later, something will get through. We're shooting $2 million interceptor missiles at $50,000 Houthi drones, the math of which you guys could obviously do in your head. And here's the thing, we can't replace them. We can't make them fast enough to replace them, which means our magazine is being extended, and we need to be ready for another conflict, potentially, hopefully not, but we need to be ready for another conflict in the South China Sea. Now, as Doomberg pointed out in my interview yesterday with him, by the way, check out that interview with Doomberg, why are we there in the Red Sea? This isn't our problem. The United States is an energy secure nation. This old neocon mentality that we need to snuff out every conflict in the Middle East because oil does not apply to us. The United States is a net exporter of energy. We don't need to be in this fight. Who stands to lose in the Red Sea? It's not us. Do you know who it is? Most of that cargo that transits the Red Sea is going back and forth between Europe and China. This is their problem. Why are we doing this? Why are we expending valuable resources that we can't replace to protect our enemy's supply lines? What would Sun Tzu say about that? This is stupid. We need to do a better job of picking our battles. Thankfully, there was no loss of life when that plane went overseas, and there hasn't been any loss of life on our side. But how long can that really go on? Maybe, just maybe, we pick our battles. Let's shrink my big melon of a head and get through this news today, shall we? And guys, don't forget that like button and that subscribe button for the algorithm. Come on back tomorrow because we do this every day. But right now, the S&P 500 has swung negative. We're down 26 points, about 0.5% lower. The Dow is down by just 2 points. We'll say basically unchanged, but we were positive just a few minutes ago. And the NASDAQ is down 133 points, 0.69% lower. So, we had all three indexes just swung into the red in the last few minutes here. The U.S. dollar index, meanwhile, my chart's not ready, up 13 basis points here, back above 99. That is at 99.06 here, slightly stronger dollar this morning. Looking over at the bond market this morning, we've got the 30-year Treasury yield is higher by about 0.5 point here. Not a lot of movement in bonds. The 10-year is higher also by a fraction of a point, 4.218% for the 10-year. The 2-year is at 3.699. That's higher by 1.5 points. And the 1 month is higher by 0.5 point at 4.307. I got to plug my thing in here before my other battery dies. Moving on to the commodities board here, we've got spot gold is lowered again this morning, $27.35, but still above $3,300, $3,316 for spot gold. Spot silver is a little bit higher here, meanwhile, $33.35. That's higher by about 19 cents or 0.6%. We've got copper's higher by 0.37%. Platinum and palladium are both down about 0.5%. And crude oil is lower by 1.9% here, $60.88. That's off by $1.17 for June WTI futures. Maybe a little bit of concern about global recession weighing on oil prices this morning. Looking over at Bitcoin, we're at $94,693. That's down by about $350 versus this time yesterday. Still in this price band we've been trading at for a couple of days. As always, watch that 92,500 level. That is the support that needs to hold here. Also, we got this one here on Twitter this morning. It's worth pointing out as this guy, I'm not sure who this guy is, Mr. Lundy, points out that the 60-day birthday of the executive order on the exploratory ad hoc committee to look into kind of whatever they called it for the Bitcoin strategic reserve. Well, that 60 days is coming up on May 5th. And remember, within 60 days of the date of this order, the Secretary of the Treasury shall deliver an evaluation of the legal and investment considerations for establishing and managing the strategic Bitcoin reserve and the strategic digital asset stockpile going forward. That's in the next few days here, guys. That's May 5th, which May 5th would be Monday. By Monday, we should figure out WTF they're doing with the strategic Bitcoin reserve and the digital asset stockpile, the other stuff. So there will be some news in Bitcoin. Will it be a sell the news event, or will we see it rally on optimism? We'll just have to wait and see. All right, now let's talk about the trade balance. Guys, this was pretty alarming here. The U.S. trade deficit in goods widened sharply to $161 billion in March, the widest on record, and sharply above the market consensus for $146 billion. Now, you can see here, guys, I mean, this is all negative, right? The U.S. has always been a net importer. That's nothing new, but it's the severity, the size of this here, $162 billion. The previous record was in January at $156 billion. And again, February is pretty high. This is all front running of tariffs. And it started, you could say this started in December as the tariff rhetoric was picking up here. Now, if we zoom out on this chart, you really get a better idea. Let's zoom all the way out to 5 years. Now you can kind of get a good idea of how the trade deficit just keeps going. And look, it really accelerated with COVID when they gave everybody the stimmy cash. You can see the trade deficit got bigger and bigger. It peaked in 2022, recovered a little bit, stayed flat for 23, and started declining again in middle of 2024. And it has just taken a nosedive since the prospects for the trade war started. Now, I suspect we're going to see this start to correct to the upside very soon here because the tariffs are obviously going to take a big chunk out of imports. But for now, this front running of tariffs is going to be a big drag on GDP. That Atlanta Fed GDP now estimate is probably going to come down in the next few hours here, and we'll see what they say when that finally happens. Also worth pointing out, yesterday we got the Dallas Fed's manufacturing index, and it was pretty terrible. The general business activity index for Texas manufacturing plunged by 19.5 points to negative 35.8 in April 2025, reaching the lowest level since May of 2020. Pay attention to that, May of 2020, guys. Now, this is kind of what the logistics world is telling us. And I've got Craig Fuller coming on the channel later this week to talk about this, but big decline in manufacturing activity in Texas. There it is, negative 35.8 from negative 16.3 in March. Now, let's zoom out here, guys. Let's look at a 10-year chart. And again, you can kind of get an idea. Here we are all the way down here, negative 35.8. That is the lowest since May of 2020. Now, the all-time low was negative 74 in April of 2020 when everything was shut down. But you can kind of see here, guys, the worries in the economy, the manufacturing activity, the trade deficit, soon to be the logistics, the activity at ports. It's already plumbing those COVID lows, and in some cases exceeding those COVID lows. I think the average person on Main Street in the U.S. still remains blissfully unaware of what is headed this way economically. It's not going to last. This stuff is going to start showing up on the shelves and the price tags by the middle of next month. Meanwhile, we got another big one here. UPS plans 20,000 job cuts this year after the Amazon pullback. Now, this doesn't strike me as a trade war story. This is more of a UPS is breaking up with Amazon. They want to see other companies, but they're still going to be friends. But I suspect maybe the trade war is also weighing at least a little bit into this decision. UPS expects to cut 20,000 jobs this year and close facilities as it dramatically reduces shipments for e-commerce giant Amazon. The reductions in its operational workforce are part of a network overhaul in response to expected lower volumes from our largest customer, Amazon. UPS said in a statement on Tuesday that also detailed first quarter results. The Atlanta-based courier will shutter 73 leased and owned buildings by the end of June and said it may identify additional facilities for closure. UPS aims to cut costs and improve profitability after announcing a plan in January to slash the number of low-margin Amazon parcels it delivers by more than half over 18 months. The package handler expects $3.5 billion of total cost savings this year from the network reconfiguration. While UPS didn't update its 2025 outlook, it said it would detail expectations for the second quarter on Tuesday. It previously predicted full-year revenue of about $89 billion and a full-year operating margin of around 10.8%. The decision to not update the annual forecast underscores the widespread uncertainty across corporate America after the Trump administration announced, and in some cases paused or adjusted, large tariffs on imports from other countries. So UPS is, look, they're kind of pulling their guidance without pulling their guidance here. Right now, UPS stock, they were positive ahead of the opening bell a few minutes ago. Let's refresh this, make sure we get accurate information. All right, right now it's down 1%. It was actually up a few percent initially on that layoff news. The market likes layoffs, but they must have said something on the conference call. I'm not sure what, but they're now down 1% ahead of the opening bell, $96.12. Now, let's talk about this Spanish grid timeline. This is from Javier Blas. He's a pretty good commodities expert. He works over at Bloomberg. He's talking about the Spanish grid operator just offered their first but tentative blackout timeline. This is what Red Electrica is in Spain is talking about here. At 12:33 p.m., the grid suffered an event akin to a loss of power generation. All right, whatever that event was, whether it was this atmospheric disturbance that caused it, some breaker tripped somewhere. All right, some section of the grid went down. When you get a breaker trip like that, typically you get swings in voltage. There is a perturbation, and the system seeks to right itself. Almost immediately, the grid self-stabilizes and recovers. That's kind of what it's supposed to do. All right, the grid is working as designed here. There was a hiccup, but everything's working. But 1.5 seconds later, so almost immediately, a second event akin to a loss of generation hits. All right, so now you can see the grid didn't really self-stabilize. I mean, they're saying the grid self-stabilized, but a second and a half later, the same thing happened, so maybe it didn't. And about 3.5 seconds later, the Spain to France interconnection is interrupted due to grid instability. So these connections, think of it like bridges between the French and the Spanish power grid. Those breakers open up. The French say, whatever's going on in Spain, we are having none of it. So the French, those breakers open up. So whatever Spain was sending to the French or taking from the French is no longer there. Immediately after, a massive loss of renewable power hits the system. So right after that French interconnection separated, the whole Spanish grid just starts going down, cascading outages. Power grid cascades down into a total collapse. Red Electrical also said that at its worst point of the blackout, the Iberian Peninsula generation did fall to zero. There was no power anywhere on the entire Iberian Peninsula yesterday. Earlier data suggests that the blackout wasn't total with 10 gigawatts of generation, but that data was faulty. So, guys, you can see here, this whole thing took 3.5 seconds. From 12:33 p.m. in that initial event, the grid didn't stabilize as it was supposed to, although they tried to sneak that in there. And that for a second and a half, for 1.5 seconds, things were going really well. So ride that rocket, Spain. Congratulations on 1.5 seconds of doing what you're supposed to. After that, nothing worked. It took 3.5 seconds for the entire grid to collapse in 2 countries, all of Spain, all of Portugal. The whole peninsula was out of power. And coincidentally, BP's green energy architect was forced out as profits halve. Their profits were cut in half, and they're firing their wind and solar lady. Well, what's the hurry? I mean, you waited until your profits were cut in half. Maybe see how things shake out here. The chief architect of BP's green energy strategy has been forced out and will not be replaced as the oil giant turns its attention back to fossil fuels. Giulia Cerchia, sorry how I'm mispronouncing it, I don't get out much, who's head of BP's sustainability division, will leave on June 1st, the company said on Tuesday, just days after it emerged that the activist hedge fund Elliott Management was pushing for her replacement. It came as BP said profits halved for the first 3 months of 2025 compared with a year ago. BP shares fell by more than 4% in early trading after it posted a 49-cent fall in profits to $1.38, falling short of analysts' expectations of $1.53. BP is scrambling to shift its focus away from the climate-friendly agenda set by Bernard Looney, the former CEO who was sacked in 2023 after misleading the board over relationships with colleagues. Oops. Ms. Cerchia was hired under Mr. Looney in 2020 with a role that also included embedding the group's ethics and compliance within the organization. Last week, it was reported that Elliott, which owns more than 5% of BP shares, was pushing for her to be removed. A spokesman for BP said on Tuesday that Julia Cherkia is stepping back from her role from June 1st, 2025, and is leaving BP to pursue other opportunities, and she will not be replaced. Yikes. Yeah, she's out. Now, look, just how bad is the problem? This is also from Javier Blas here. BP's operating cash flow went from $7.4 billion to $2.8 billion. All right, that's like $4.5 billion just disappears from their cash flow there. And on top of that, their net debt also increased by $4 billion. So $8.5 billion up in smoke as they just continue burning cash, pouring it into wind and solar, which, oh, by the way, took down half the continent's power grid yesterday. European energy policy is just run by imbeciles and children, literally. And they're paying the price for it. BP currently down 3.47%, $1 lower, $28.12 ahead of the opening bell. All right, now we have got Coca-Cola tops earnings estimates, keeps full year outlook as it expects minimal tariff disruption. Look, let's just stick to that. I think that's the takeaway here. They're keeping their outlook. Coca-Cola posted halfway decent earnings, down slightly year over year. You've got the Ozempic thing and the struggling consumer. The backdrop of those stories is unchanged. But Coke is not taking any additional hits. They're not expecting any additional hits due to the tariffs. And the market initially liked that. But look at this dive in the last few minutes here at 9:17 a.m. This thing took a dive here. Currently down 0.98%. Let's refresh this, make sure that's accurate. Currently down about 1%, $71.09. So initially, Coke was positive, but not anymore. We've also got General Motors beats Wall Street estimates, but they are reassessing their full year guidance amid auto tariffs. Let's skip over the earnings results, which, again, it was a beat, but just barely. We believe the future impacts of tariffs could be significant, so we are reassessing our guidance and look forward to sharing more when we have greater clarity. So they're not pulling their guidance. They're just saying, look, we're going to reassess our guidance. We just have no idea how to because, well, you guys may have noticed things in D.C. are a little volatile these days. We don't always get the full story right away, and it changes day to day. So the Breyer guidance can't be relied upon, and we'll come back to the market with clarity as soon as we have it. And GM stock is not looking so hot this morning. It's off its lows from the morning. Let's refresh. Currently down 1.9%, $46.35 for General Motors. We also got earnings from Spotify this morning, and Spotify not looking so good here. Spotify earnings come up short as it warns of short-term noise. Spotify technology stock dropped sharply in pre-market trade on Tuesday after missing on earnings and guiding for more noise to come. Spotify stock tumbled 8% in pre-market trading. It was off those lows the last I looked, but who knows now. The stock had surged 34% this year. It's also up more than 100% over the last 12 months. The company said it tripled its operating income to 509 million euros. Revenue rose 15% to 4.19 billion euros, but the market was expecting 548 billion of revenue. 548 billion of operating income on revenue of 4.2. So look, the revenue was a slight miss. The operating income was a big miss, even though they more than tripled it. This is a stock that is just the victim of its own performance here. The expectations got too high. Subscriber growth was 12%. Monthly active users up 10%. The short term may bring some noise, but we remain confident in the long-term story. And the direction we're heading in feels clearer than ever, said Daniel Ek, Spotify's founder and CEO. Now, Spotify stock not looking so good here, down 6.3%. It was down more than 8% at one point this morning, so things could be worse. And again, fear not, Spotify. Nobody Special Finance is now available on your platform. Check that one out. If you guys are watching on X, I'll put the link down below in the comments. If you guys are watching on YouTube, there's a link to my Spotify channel in there. And we have got India is prepared to offer the U.S. most favored nation clause. Guys, it looks like a trade deal with India is coming. This as sweetener in trade talks, sources say. India is prepared to offer the U.S. forward most favored nation clauses and as a sweetener in trade talks. India seeks to be a major supplier to the U.S. in areas vacated by China. India hopes for a quick deal with the U.S. on trade with concessions on 90% of tariff lines. So India is willing to talk on most things. They're clinging to some of their tariffs there, but hey, it looks like things are on the table here. India has made preemptive concessions, seeks to avoid Trump's 26% reciprocal tariff. A most favored nation clause, also known as most favored customer or prudent buyer clause, is a contractual term that guarantees a buyer or licensee receives the same or better terms as any other buyer or licensee. Essentially, it prevents a seller or licensor from offering better terms to another party without also extending those terms to the party within the MFN clause. As a reminder, Treasury Secretary Bessent said that the first trade deal to be announced might be with India, and the markets are just waiting for those details. So it looks increasingly likely that we will get a deal with India. All right. Now, there's something else we got to talk about. This one kind of made me go yuck this morning. The club. Look, guys, I was very critical of President Biden during his time in office and the selling of access, referred to as the Biden crime family, as the president often says. It's pretty obvious people were giving money to Hunter for his artwork. Yeah, he's a real artist, Hunter. Also giving money for his hedge funds, which he probably lost or put up his nose, whatever. They were buying access to Joe Biden and doing that. And I was very critical of that. Donald Trump was very critical of that. And then how do you explain this? This is from Unusual Whales this morning. There is a new club by Donald Trump Jr., David Sachs, and the Winklevoss twins called the Executive Branch, which allows for members to have close proximity to President Donald Trump. There's a membership fee of $500,000. This club, they're calling the Executive Branch. It's owned by Don Jr., along with these other partners and son, Steve Witkoff. And founding members are David Sachs, Tyler and Cameron Winklevoss. Those are big names in the crypto space. And they're calling it Executive Branch. Look, guys, this looks an awful lot like selling access to President Trump here. And if you're going to be critical when the Bidens do it, then you got to be critical when the Trumps do it. This stinks. This is another one of those unforced political errors that the Trumps often make. They're going to get beat over the head with this, and rightly so. They should be beat over the head with this. It so obviously looks like they're selling access to the president here for $500,000. That is not how it's supposed to work. As they always say, it's a great big club, and we ain't in it. And I just want to say thank you very much to Bread and Circuses. All right, Bread and Circuses, nothing to say here, but just being a swell guy, supporting the channel. Thank you so much, Panem et Circuses. I appreciate that very much. Mish, if you're listening, do me a favor, brother. Shoot me a text if Bread and Circuses followed up with a question after that. I don't want to miss it if he did have a question, but I also don't want to rummage through. Look for it on the air. Thanks again, Bread and Circuses, for supporting the channel. Pasta Man says, nice job on the Doomberg interview. A lot to unpack. Yeah, we took a trip all the way around the world. I tell you, I was listening to a lot of Doomberg stuff over the weekend when I was on my lawnmower cutting my grass. And there are some things I don't agree with Doomberg on, very few things, but I agree with him on most things. And he has a very good way of putting it. He's incredibly well researched. When I say Doomberg is a team of people. Nobody really knows who they are. But that was a really good interview. I was pretty happy with the way it came out and highly recommend you guys check that one out. Check it out on my feed. And we finally got Mish coming through here. Let's see what he's saying. No question. Okay. Thank you, Mish. Also, thanks again, Pasta Man. And thank you to Thomas Owen, who says Newmont has 115% earnings beat, but down this week. Is that Newmont, the gold miner that we're talking about there? Look, the miners have had one hell of a run here, guys. 115% earnings beat, but down on the week. Zoom out on that chart from that gold miners. They have had a heck of a rally. So again, kind of like that Spotify chart, up more than 100% year to date. It doesn't matter how good your results are. When you're up that much, the slightest hint of anything imperfect, not even anything bad, is going to take you down in that case. So I still own a couple of miners. They're actually some of the few stocks that I still own. I'm happy with those. I'm going to sit on them. I think gold still has room to run here. Congratulations on your gains in Newmont, Thomas. Thank you, sir, for supporting the channel. Viv B, thank you for supporting the channel with 5 new melon heads. Well, welcome to the melon heads, you 5 new members. Thank you so much, Viv, for supporting the channel. And guys, if you receive one of those memberships, be sure and say thank you to Viv for that gift. Steve Woitis says, post-election Canada is likely about to do the opposite of BP and others and invest heavily in green energy projects. Yeah, look, Talk about unforced political errors here. The Canada election results. A few months ago, the Conservatives were set to sweep that election in Canada. I mean, it was like a done deal. And then the whole 51st state thing happened and the trade war happened. And all of a sudden, the Liberals in Canada surge in the polls. And look, let's be honest here. I don't think this was Pierre Poilievre losing that election. I don't think this was Conservatives in Canada losing that election. I think this was Donald Trump in America losing the election in Canada on behalf of the Canadians. If you really think Trump's rhetoric didn't hand that election to the Canadian left, then you haven't been paying your attention. It's tough to run as a conservative when your American counterpart is insulting your country, saying we might just make you our 51st state. It's hard to run with that. And, look, Trump's style is very unique. It's part of his personal brand. That's just how he operates. It's part of what helps him reach middle-class voters. It's also part of what hurts him in a lot of cases. And in this case, he created an enemy where there was an ally before. I mean, if the Conservatives had won in Canada, we would have a much easier time getting a trade deal done here that's more favorable to the United States. Instead, he's got to deal with this Carney guy who's just this big-time WEFer, CCP, tickling, but I digress. Donald Trump lost the Canadian election, not the Canadian Conservatives. Just my opinion, and I think that's pretty obviously what happened. But thank you very much, Steve, for supporting the channel, sir. Pigos Trading Desk says, I bet U.S. offering military support for India v. Pakistan. Look, that's very possible. It's, arms. That's one of the few things the U.S. exports a lot of. We export a lot of food. We export a lot of chemicals. We export a lot of energy. And we export a lot of weapons along with financial services. It's a good bet military is on the table here, Pigo. By the way, thanks again for hosting me on your channel, Pigos Trading Desk. Here's the thing, guys. The whole idea of a proxy war, right? Like the U.S. and the Soviet Union, we had proxy wars, so we never went nuclear. We had our little countries that we fought through, like parents fighting in front of their kids so the parents don't actually come to blows, that kind of thing. Like, what happens when the proxies are nuclear? The whole proxy war to avoid nuclear Armageddon doesn't work when the proxies have the bomb. Both India and Pakistan are nuclear. So pay close attention to those hostilities. I'm not sure arms as a deal sweetener in this case is really such a good idea when the threat of nuclear war is on the rise like that. So that's another one of those 2020s bingo card things you just got to watch out for, the India-Pakistan conflict. Thanks, Pigo, for supporting the channel. And Pigo's back saying Amazon, much like Temu, showing tariff cost on retail. Yeah, I did see a little red line on CNBC scroll across the screen while I was talking there that President Trump is pretty angry that Amazon is going to put a line item tariff charge on their bills. It's obviously a political maneuver, but it's also not exactly dishonest, is it? I mean, let's be honest, that charge is appearing because of Trump's policies. And if they're going to call it out specifically, well, defend your policy, stand in front of it, take the heat that comes along with it. Look, President Trump's poll numbers are going to head lower. They're already heading lower. They're going to head a lot lower. We'll see how much stomach for this he really has. If he's all about doing the right thing and reshoring manufacturing and growing a healthier economy, but taking your medicine, taking the pain, he's going to have to show us he's willing to do that with his own poll numbers. See if he does it. Or maybe we get April 9th again when he backs out to give the bond market what he wants. Thanks again, Pigo, for supporting the channel. And thank you, everybody, for having your coffee with the Melonheads this morning. I appreciate your time very much, guys. Don't forget that like button and that subscribe button on the way out. It really helps with the algorithm. Thank you also to my magnanimous Melonheads on YouTube and Patreon for supporting the channel. You guys rock. Links down below should you feel so inclined. Appreciate the super chats and all the support. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.